Would you rather build your wealth through a condo property or through REITs? One ties up your money in walls and maintenance fees, and the other pays you dividends quarterly and grows with the market. In today's video, let's put them head to head and let's see which one really wins over the medium to long term. We'll look at 5, 10, and 15-year returns. Pero ano nga ba ang REIT and why it has become one of the most popular investment options in the Philippines? Globally, REITs or real estate investment trusts existed much longer, since the 1960s. But in the Philippines, it was only launched recently when the REIT rules were relaxed in 2020. So it's a fairly new investment, but why it's becoming very popular to investor? A REIT, again a real estate investment trust, is like buying a slice of a property empire that powers the economy. REITs lets you invest in massive real estate portfolios like malls, office buildings, and hotels without needing millions of down payment that you need when buying a physical property or a condo. You know what's the best part? You avoid the headache of managing tenants in a physical property. REITs collect rent from tenants. Remember yung mga malls, office buildings, and hotels, and they're legally required to give you back at least 90% of their profits in the form of dividends. Instead of saving millions for a condo, you can have a property portfolio with as little as 1,000 pesos. You earn in two different ways: from dividend payouts and from the appreciation of the REIT's share price. Condo, however, you own a physical property, and for many of us, particularly OFWs, property or condo investing is still very popular as well. Owning a condo gives something physical, and that has a real psychological impact. Think about it. Owning a property gives you security. You have a roof on your head, and that's yours. There's also control and pride, because unlike digital assets on a screen, a condo is something that you can touch, you can decorate, you can renovate and change. When you buy a pre-selling condo and when it's finally completed, there's excitement. Your brain rewards you with dopamine and serotonin when you finally get the keys. It's like an achievement milestone. And for many Filipinos, property is also about legacy. You're leaving behind something concrete for family. That's why condo investment is very popular, because that permanence makes you feel rooted. But let's compare both investments purely in financial terms. First, let's look at accessibility. REITs are simple investments that you can buy with your fingertip. You can open a brokerage account online like Cold Financial, invest 10,000 pesos a month. You instantly have a real estate portfolio. You can sell anytime if you need cash. Condos, on the other hand, you'll need years just to save for a down payment. And if you're not putting that savings in a high interest savings account, your cash earns almost nothing in the bank. And once you buy a condo, your money is locked in. Next one is the cost. With REITs, there are no repairs, no tenant headaches. You only pay minimal brokerage fees. Compare that to condo, you face mortgage interest, association dues, repairs, property taxes. Your asset can easily turn into a liability, especially if your condo is unable to pay the entire cost of running the property. We talk about the maintenance, the admin fees, and your mortgage. Now let's look at taxes. With REITs, your dividends are taxed at 10%. Simple, predictable. With condo, there's annual property tax, rental income tax if you rent it out, and if you decide to sell, there's also capital gains tax. Now, let's compare the average return of REITs versus condo. Here's what I found. Philippine REITs performance as of 2024. Ayala REIT has given a very modest 5.4 dividend yield plus 74% total return since its IPO in 2020. Robinson's REIT and CREIT, it's also giving 5.5 to 6% yields. DDMPR or Double Dragon Meridian Park REITs, the highest yield was 8.9%, though it's more volatile. So if we look at the market average so far, it's 5 to 6% dividends per year. But if you include the share price appreciation, that could be 10 to 12% total shareholder returns for top players like REIT. So if you compare that with condo, the average historical growth in big cities is 3% increase in value annually. So imagine you're saving 10,000 every month for 5 years. That's 600,000 with bank financing and promos. This can cover 20% down payment and fees for a mid-range condo with a value of 3 million pesos. So how does it look? For the first 5 years, you're just saving for your down payment. No growth, just cash piling up. But let's assume after 5 years, you managed to buy with 20% down payment of a property valued at 3 million. Your mortgage is therefore 2.4 million pesos. With a mortgage interest rate of 6%, that's 27,000 monthly amortization. You could also incur a maintenance fee of say 3,000 pesos. So that's monthly outgoing or cash outflow of 30,000. If you can rent that condo at 20,000 per month, you have a negative cash flow of 10,000 per month. Negative ka. And let's assume that there's 3% annual increase in value of your condo. So in year 10, your condo is worth 3.4 million. But if you less the mortgage plus the maintenance cost, even if you're receiving rental income, you're still on negative cash flow. Now, if you hold the property a little bit more longer, say after 15 years, your condo value grows to 4 million. If you sell the condo, assuming you have fully paid the loan, you keep about 2 to 2.3 million net. Here's the actual comparison. If you invest the same 10,000 pesos every month in REITs instead of condo, for the first 5 years, REITs giving you dividends and capital appreciation, so your portfolio is now 806,000. At year 10, your condo has appreciated 3.4 million, but you still have negative cash flow. But with REITs, your investment is now 2.1 million. And by the end of 15 years, REITs nearly double the condo's growth. So as you can see in blue line is condo. It's negative at first because of the mortgage burden, but it jumps up in year 15 when you have finally paid off the loan with 3% yearly appreciation in value. The net total value, if you deduct all the down payments plus the costs or maintenance cost incurred, is 2.35 million. Orange line, however, is REITs. You can see a smooth compounding growth from 806K in year 5 to 2.1 million in year 10 to over 4 million in year 15 with positive cash flows along the way. That's more than double of your 1.8 million total investment. Now, what about the risks? Of course, no investment is risk-free. REITs depend on the stock market, prices fluctuate, dividends may rise or fall, and interest rate changes can affect performance. Past returns like REIT's 74% gain since 2020 don't guarantee future results. But condo also carry uncertainty. While we assume 3% annual appreciation, in reality, values can rise faster in prime locations. But it can also stay flat for years if, like, say, there's oversupply and there could be period of weak demand. Plus, property liquidity is a challenge for condos. It may take months or even years to sell. Both are real estate. One eats your cash flow, the other one builds it. But always remember, whether REIT or condo, do your own research and invest only what aligns with your financial goals and risk appetite. I did the modeling so you can see the numbers clearly, and while REITs have outperformed condo purely from financial returns, the best option is always up to you. Because if you value prestige, ownership, and something you can see and touch, then condo is obviously more rewarding. So whether it makes more sense to lock your money in a condo that may appreciate slowly, or planting that 10,000 pesos every month into REITs that pay you back quarterly compounding interest over time, you can see that with both investments, either REITs or condo, you will only maximize the rewards if you stick to it for the long term. For me, the best investment decision is the one that you enjoy doing. You don't even have to choose one of these. I made another video to compare other investment options, so click here or here to watch it. If you found this helpful, hit that like and subscribe button so you won't miss brand new videos coming up.